Hello and welcome to our discussion on the financial statements. In this, I'd like to take an example of a balance sheet with most of the information given there. Now we want to present the same balance sheet in different formats, which we would like to call them as condensed balance sheets. So observe this. So equity is 50 plus 180. Long-term debt is 25,000. Current liabilities is 23,000. The fixed assets of the company are plant and the land, no investments, and the current assets are cash, debtors, and stock. Now the advantage of preparing a condensed balance sheet that it helps us in getting a fairly macro picture about the company's sources and the assets. From an analyst perspective, it may not be necessary to start with to understand each and every item. So, however, it is necessary and useful to find out what are the sources of the funds and how is the company using its sources. In other words, what is the composition of the sources of finance and what is the composition of the investment decisions. Now this balance sheet can be further trimmed with a focus on the long-term sources, and the long-term sources is equity and the long-term debt, and we give a name to that called capital employed. So capital employed is equity plus the long-term debts. The capital employed is represented by fixed assets, investments, and the net working capital, CA minus CL. So capital employed of a business can be calculated by adding the capital, retained profits, and the bonds, or capital employed can also be calculated as total assets minus the current liability. So total assets minus current liability. So capital employed is the long-term sources, that means the funds from the debt and equity. Long-term debt and equity is also called the capital employed. So the total of the balance sheet sometime is not important. What is important is to understand the composition of the items and the focus of the presentation. Now we'll present the same balance sheet by giving a focus on the equity. So equity is equal to assets, fixed assets, plus investment, plus net working capital, minus the long-term debts is the equity. So equity is capital plus the retained profits. Equity is also computed as assets minus all liabilities, both short-term and long-term. Now the focus of this balance sheet, or rather this balance sheet, shows all the sources and all assets. This balance sheet also shows all sources and assets, but the focus is the long-term sources, which is called capital employed. Whereas this case, it also shows all items, but the focus of the presentation is equity. Now let us take a balance sheet of a company. Suppose it's a Reliance Industry, and understand the effect of the benefit of presenting the financial statement or the balance sheet in the condensed format. Now we converted the balance sheet of Reliance into the condensed balance sheet. So as a result, it shows 6 items: equity, long-term debt and current liabilities, and the assets are fixed assets, investment and the current assets. While computing the equity, we have taken the capital, reserves and plus minus the deferred tax asset or a liability. In this case there was a deferred tax liability, the long-term debt and the current liability. The sources side of the balance sheet of any company shows the financing decision. So Reliance 59% as on 31st March 2010, as on 31st March 2010, 59% of the assets are financed by equity. So that means the company is dependent on equity more than the outsider's money. 16% of the sources are in the form of the current liability. The asset side of the balance sheet shows the investment decision. So the balance sheet shows that 66% of the total assets are in the form of fixed assets. A very small percentage is in investment. So the sources side of the balance sheet reflects the financing decision, and the asset side of the business shows the investment decision. But the same balance sheet can also be put in the form of the capital employed with a focus on capital employed. The capital employed of Reliance as on 31st March is equity plus long-term debt, represented by fixed assets, investments and the working capital. Now this balance sheet can be further changed and be reflected by using or presented by using the equity as the focus. Equity is 148,096, supported by the corresponding assets minus long-term debt. So whenever we get a balance sheet with a large number of items, it's useful to convert that into a condensed balance sheet and find the percentage of assets and liable sources to get an idea about financing decisions and investment decisions. Thank you very much.